Hopefully you can see this. It's the last 10 years. So when I say the rates are normal, they normal. So when you say, man, I'm just trying to survive until rates get back to normal, this looks normal to me. In 2015, the average rate was 175. 9 years ago, the average rate was 165. Right now, currently, the average rate is 164. Looks normal to me. Right here was the pandemic. Get these years out your mind. We know why rates went up here. Infusion of money into the economy, which increased volume. Volume exceeded capacity. Capacity came in because rates were so high. Capacity didn't come in just to help the economy out, get people toilet paper. No, people came into trucking because they had the money to come into trucking. They had the money to cash out. They had the money to buy equipment and make this money because it was promoted. Whoa, people are getting rich. People are making, high rates. So they came in. But guess what? It wasn't going to stay like that forever. So now the market is corrected. But guess what? A lot of this capacity that still came is here, but the demand is not where it was here. So now you got an overabundance of capacity and low demand, and even lower demand than probably what we would have had if this event never would have happened in the first place. So when people say, well, I'm waiting for rates to go back, they back. They're back to what the rates were prior to the pandemic. So this is back. I've been saying it. Yo, rates are normal. Rates are normal. Rates are normal. Man, can't wait for rates to get back. Back. What back are you talking about? Because if you waiting for the shit to go back here, man, you better hope they concocting some new type of shit to wipe you out. Some type of new COVID or something, so we can have another pandemic or something. Something gonna have to happen. In a normal economy, on a normal upswing, you're going to look at something like this. This is on a normal, when the economy was growing. If you're old enough to remember, you were paying bills or you were living on your own during this time, this was gradual economy growing and thriving. People were spending money, people were buying homes. And this is because this was a gradual growth from the '08 housing market correction. If you're old enough to remember how things were for those years after '08, this was gradual. After an event kind of similar to this. So this is normal. I took it a step further. $2015 average rate $1.75. Stable rates, modest growth. Know why we were growing. We had years of pressure, suppression due to what happened in '08. 2016, rates dipped in early 2016, recovered by the end of the year. 2017, gradual increase due to economic growth. 2018, rates peaked due to high demand and tight capacity. There was a lot of demand. People had money in 2018. People were spending. But that popularity that caused people to come into trucking, it's still driving people into trucking. Popularity due to just a different mindset shift. People not wanting to work traditional jobs, not wanting to work for people. So today, people are looking for things where they can do on their own. Trucking just happens to be one of those things where you can be out on your own and be a business owner at the same time. We weren't there. Our mind frame wasn't that then as it is now. So there wasn't people rushing into trucking. People were still going out looking for traditional jobs. a trucker was looked at like what a trucker used to be looked at, a trucker. Now it's kind of celebrated in social media as a great way to make money and be your own boss, right? So there was a high demand due to economy rebounding and recovering, but it exceeded the capacity. That's why the capacity was tight. 2019, the market softened for those that were in trucking, like me in 2019. There was a slight little freight recession. We saw a bunch of trucking companies go out of business. A lot of the companies that used to deliver to me, like New England Motor Freight, went out of business in 2019. There's quite a few companies that bit the bullet in 2019. 2020 came in, really volatile. Why? Because when the pandemic first hit, the supply chain was disrupted. Everything stopped, everything halted, nothing moved. Supply chain started to pick up, money started to come in. You had 2021, you had the COVID, which the high post COVID demand, which pushed historic rates. Now you got rates elevating due to the demand, right? Because of the infusion of capital that came into the economy from things like PPP, idle, childcare, unemployment, federal unemployment, state unemployment, scams, so on and so forth. People had money, so they were spending it and increased the demand. Capacity came in to meet that demand. 2022, we're peaking out now. Supply chain issues and inflation kept rates elevated. 2023, we start to see the decline. Demand softened. Money was running dry. People was running out of that free money. A lot of people that got the free money had bought everything that their hearts ever desired. Anything they ever wanted, when they got that free money, they had bought it already. You had big box retailers that had quadruple and triple their orders in fear of another supply chain disruption. Just in case things got shut down again, they just purchased more. So they had a lot of things in storage. So demand, it softened. And rates started to correct themselves. 2024, the market correction continued. It wasn't going to stay like this forever. Only a fool would think that. The markets continue to correct. And then here we are today. Rates fell to near pre-pandemic levels. Back to normal. Back to normal. Hit the like button, subscribe to the channel, turn on post notification. We're back to normal. So, Mark, if we're back to normal, okay, we see the chart now, Mark. You've been telling us this. If we back to normal, why it don't feel normal? Why are we struggling? I'm gonna tell you why. Your cost of operation. 165 in 2016 ain't the same as this 165 today. What you mean? 165 is 165. No, it's not. 165 in 2016 took you a lot further than it does today. This owner operator who was running at 165 in 2016, their insurance was cheaper, their maintenance was cheaper. When they put their truck in the shop, the labor was cheaper, the insurance was cheaper, labor was cheaper, they had a driver. The cost to operate was significantly cheaper than it is today. So this 165 would take a person operating in 2016 a lot further than it does today due to inflation. So rates are normal. Rates aren't the issue. Inflation is the issue. Trucking is a market. It doesn't scale with the rate of inflation. Why? You got a fragmented market. You got desperation. If you're a single owner operator, you're a small fleet owner, you're competing in a more fragmented market. When capacity exceeds demand, you're going to have people underbidding because they're desperate, which is what's going to continue to suppress things. The harder it gets, the tougher it gets. The powers that be notice, so they prey on it and they take advantage of it. Why set higher prices when we know people going to beat each other up to just get the work, which is going to lower the prices in the first place? The whole point of deregulation. As a shipper, if I'm selling a product and I'm wholesaling, the way I make money as a wholesaler, a manufacturer, is units. I'm not doing tools and fuels. I'm trying to move units, right? I want a person to order more units from me. The more units they order, the cheaper unit cost I can give them. At the end of the day, I know that retailer is dependent on the consumer. I need consumers to continue to buy the product so that the retailer can continue to buy from me. This is business. We need to think like business. Well, I think I'm a business person. I think like a business person. So I understand shit. So when I come into shit, I understand what I'm coming into. I know how the landscape is played, so I know how to play the game. Why would a wholesaler want to pay you more so that a retailer has to go up on their price to the consumer, which causes what we have today with inflation, and people stop buying shit? Then that affects them. So we got to cut where we can cut. Where we going to cut at? We already dealing with inflation. We can't really deal with that. So we have to find ways to keep our costs as low as possible because we still got to compete against our competitors. Where can we start shaving? Why would we give you more money because of inflation? If you're going to take it, well, screw it. Let y'all fight it out. Ultimately, we still want people to buy. We still need consumers to buy so that the retailers can buy from us. If the shit is sitting on a retailer's shelf and not moving, then the retailer ain't going to order. So if I can cut and prey on ignorance, so be it. It's business. It's not personal. Why would they increase the rates when they know somebody going to take it? The shippers hold the power. Because they're price sensitive and they control the volume. Like, ain't nobody going to voluntarily pay you more because of inflation. If I know I can get the same out of you, regardless of the economy, and I can keep my prices low because I know if I go up, if it costs me more to ship to my customer, they're going to have to raise their prices on the consumer, but then that could affect my business. Why would I do it if you're going to take it for the lower price anyway? I'm in the unit moving business. I'm in the volume business. What are we talking about? The spot market is like the stock market. I say this all the time. It's going to react to supply and demand swings. And I know some people don't, but those people won't debate me because they're going to look crazy. If a person not buying, if a large amount of people stop buying, then there's no demand. If you don't have nothing to move, what are you going to move? Air? Nobody's going to pay you to come move air. If you got this many people that are looking for loads, but the loads have significantly decreased, you got more people looking for less. Competition is going to drive down rates. Shippers know it. Brokers know it. You got people that got truck notes. You got people that got families. They're desperate. Ain't nobody going to help you out. It's business. It's not personal. It's just like the stock market. There's plenty of capacity right now. Demand is not booming. If a bunch of people are buying an asset, a paper asset, if a bunch of people sell, price goes down. Supply and demand. Less demand, the lower the prices in the stock market. Supply and demand. So you got spot market rates that are similar pre-pandemic, but your cost of operation has skyrocketed due to inflation. So that's why you're struggling. That's what the suppression is for. Rates are normal. And you know, with inflation, it hits the trucker first. It doesn't hit the shipper. It doesn't hit the broker first. It hits the trucker, the carrier first. Why? Fuel, parts and labor, equipment, insurance, all the costs that they don't have to bear. A shipper's rate sheet doesn't automatically adjust with the cost of inflation. It doesn't. If you don't negotiate, then you get what you negotiate. If you can't negotiate something that is in your best interest, you walk away. There's no floor. This is not unionized. It's not regulated. There's no regulated pricing models. It's eat what you kill. And some people ain't eating because they operating at a loss. Can rates scale with the cost of inflation? Of course, but will they? Probably not. How can they? One, a severe cut in capacity, a severe capacity crunch. Is that likely to happen? Probably not, because there's a lot of people still coming into trucking. It's popularized now. It's not like 2018 when capacity was tight. It wasn't heavily promoted. We hadn't had the pandemic yet. We didn't have influencers. I think some of the first trucking influencers, from my understanding, at least from Box Truck, it's credited to a guy named Demetrius B. And I think, from what I understand, he started creating content in 2020. Right? So now that you have influence and you have a mindset of people that want to be business owners, trucking is one of those things that people come into. So I don't see that type of severe capacity crunch probably ever again. Regulation won't ever happen. You know, truckers prior to 1980 lobbied for deregulation. They got it ignorantly, and this is what you have today. It was only going to, competition is only going to get worse. The higher the cost of living, inflation, things of that nature in a competitive market is only going to be detrimental to the carrier. So I don't think those guys that were lobbying for deregulation prior to 1980 really knew what they were in for, or knew what they were doing and how it was going to affect the generations that came into this industry decades later. They immediately started to feel it. I did a little mini documentary on it about a month and a half, 2 months ago. It didn't take long after deregulation for them to start immediately feeling that crunch. Sometimes, grass isn't always greener on the other side. Consolidation. That's where weak carriers fold and only strong ones remain. And that's something that I don't think people understand. Like, I see people, they get mad at me for holding people accountable that don't know their cost per mile, when you should be mad at me for teaching them the shit. You should want them to fail. You should want less people in. The less people, the better. If you are smart and you're doing what's in your best interest right now, understanding you have a high rate of capacity, you should want people to exit. So why get mad at me for doing aggressive accountability? If you want to be mad at me for anything, you should be mad at me for educating them. You should want them to fail. You should want them to remain ignorant. The less people, the better it is for you. Inflation is just, and especially if you over 30, you should know inflation ain't never going nowhere. Pandemic or not, things are going to continuously go up because that's just what it is. Gas ain't 69 cents a gallon no more. Milk ain't less than $1. Eggs ain't less than $1 no more. Bread ain't less than $1 for a loaf of bread. I remember you could get 2 loaves of bread for $1. We ain't gonna never see that shit no more. You go to McDonald's and get a number one for, what was it, $4? I remember when a hamburger was 59 cents at McDonald's. I remember when a White Castle burger was 19 cents. We ain't gonna never see that shit no more. Inflation ain't never going nowhere. It's only going to continue to go up. And if we have unforeseen economic events like a pandemic, it's just going to accelerate inflation, but it's never going to settle back to what it was prior to that economical tragedy. Facts. So when people say ignorant things to me, it's funny to me. You can say what you want, but that just lets me know where you're at mentally in business. And it just lets me know the type of longevity you may or you may not have. Because you're going to be competing with guys just as knowledgeable as me that are going to absolutely 100% take advantage of you because it's in our best interest. It's not because we don't like you. It's because it's business. It's kill or be killed. It's dog eat dog. The more people, the worse it is. So why get mad for me holding somebody accountable and you don't like my tone? You should be mad at me for even giving them the information in the first place. Shippers just want to give you more money, which will never happen. So that will never happen. Ain't nobody going to voluntarily just pay you more because they feel bad for you. But, in general, inflation hits the trucker the hardest and it hits them first. And the market rarely adjusts. So what am I saying? Bottom line. Rates don't rise with inflation. They rise with pain.